China raises tariffs on U.S. imports to 125%.
The top U.S. farm export to China is soybeans. Fox 6's Ashley Sears shows us the impact right here on the Badger State.
Prices have declined for the three major commodities that are facing us right now: corn, wheat, and soybeans are all down, and farmers depend on those three commodities to hold on to our farms. So farmers right now are facing really trying times, and the president is going to put a lot of farmers out of business. Like
China takes more of our soybeans than all other foreign customers combined. So they're a major part of our market.
Suddenly, 2.4 million tons of soybeans vanished from U.S. exports, rerouted to Brazil in a single day. Not a shipping error, not a clerical mistake. A calculated economic strike that's sending shockwaves through America's heartland. The trade war we've been watching unfold is entering a dangerous new phase. China imposed 15% retaliatory tariffs on U.S. soybeans just last month, in March 2025, escalating well beyond the initial 34% rates that hammered American farmers when this conflict began. These aren't just numbers on a spreadsheet, they're the difference between survival and bankruptcy for thousands of family farms across the Midwest. The consequences appeared almost overnight. U.S. soybean market share in China has already plummeted from 40% to just 18% over the past 8 years. This isn't a gentle market correction, it's what experts are calling a controlled demolition of U.S. agricultural exports. For farmers already walking a financial tightrope, the impact has been devastating. The prices have declined for the three major commodities that are facing us right now, one farmer explained, his voice tight with barely controlled frustration.
That was devastating to the American soybean farmer. Over that period of time, we lost nearly $20 billion of trade with China. Trade is 50% of the acres that are produced in the United States, and of that, currently 25% of our soybeans that we raise go to China.
The math is brutally simple. When China, once the leading importer of U.S. agricultural goods, slams the door, American farmers are left holding the bag. And the question that keeps them up at night: could this initial tariff volley foreshadow a larger, more damaging conflict? One that might permanently alter the economic landscape of rural America? What happened in April 2025 wasn't just another trade dispute. It was economic warfare with surgical precision. China diverted 2.4 million tons of U.S. soybeans to Brazil mid-journey, an unprecedented flex of global supply chain muscle that left American exporters scrambling. $1.1 billion in U.S. farm contracts evaporated within hours. Chicago Board of Trade soybean prices dropped 8.2% immediately following the cancellation announcements, creating real-time chaos on trading floors across America. Traders who'd been monitoring U.S.-China tensions for years were still caught flat-footed by the scale and suddenness of the move. This wasn't a trade war, it was a controlled demolition. Every aspect of the cancellations appeared meticulously planned, from the timing to the messaging. China's tariff exemptions conspicuously excluded soybeans, a deliberate message to Trump's rural base, according to Chad Bown at the Peterson Institute. The message couldn't be clearer. China can redirect global agricultural flows at will, leaving American producers stranded with mountains of unsold inventory. Major U.S. exporters like Cargill, ADM, and Bunge watched helplessly as contracts they'd considered secure were suddenly worthless. Is this proof that China can cut off the U.S. economy at will? And if soybeans are just the fuse, what bomb is waiting to explode? The numbers tell a devastating story. The USDA reports a 13% surge in unsold domestic soybean inventories, massive stockpiles with nowhere to go. Farm incomes could be slashed up to 18% in a single quarter, pushing already struggling operations over the financial cliff. We've been shut out mid-season with no contingency, says Matt Dunn, an Iowa farmer whose family has worked the same land for 4 generations. This isn't just about this year's crop. It's about whether there's going to be a farm to pass down to my kids. The human toll is becoming impossible to ignore. Foreclosure signs are appearing on farmhouses across the Midwest, visual symbols of economic collapse that will reshape rural communities for decades. Farm bankruptcies are accelerating, and with them comes the political blowback in key rural states that once formed the backbone of Trump's support. The irony is impossible to miss. Farmers who once believed free trade would always mean a steady customer in China now face total market abandonment.
We're already at a disadvantage, and then we throw the tariffs on top, then that's just not a good marketplace to be in. And part of this is too, we're not, world production leaders anymore in soybeans, so we've kind of taken second or third fiddle on the soybean production side.
The very voters who supported policies aimed at getting tough with China are the ones bearing the economic brunt of the retaliation. Will this trade war shift the political landscape in America? Could this be the final nail in the coffin for small family farms that have barely survived decades of consolidation and corporate farming? While American farmers struggle, Brazil is emerging as the clear winner in this economic chess match. Between 2020 and 2024, Brazil expanded its soybean acreage by 21%, a massive agricultural land grab fueled by Chinese investment. The numbers are staggering. China has poured $11.2 billion into Brazilian agricultural infrastructure, creating a parallel supply chain that can replace American farmers almost overnight. New ports, railways, and processing facilities have transformed Brazil's capacity to feed China's enormous appetite for soybeans. Satellite imagery tells the story: Brazilian farmland expanding while American operations shrink. The Ever Radiance, a massive bulk carrier now docked at Ningbo Zhoushan port flying the Brazilian flag, has become a powerful symbol of this irreversible shift in power. This isn't just about soybeans. China's global infrastructure footprint extends far beyond agriculture, with over $8.3 billion invested in Latin American logistics in just 5 years. As one Carnegie Endowment policy analyst bluntly put it, Beijing is no longer just buying food, it's buying leverage. The contrast couldn't be starker. While Brazil sees Chinese infrastructure investments as an economic lifeline, American farmers watch helplessly as their market share evaporates. Even more concerning are reports of secret joint ventures between Chinese state-owned enterprises and Brazilian soybean cooperatives, suggesting China had been positioning for this U.S. market exit for years. If soybeans can be swapped out so easily, what's next? Technology, finance, or the dollar itself? The warning signs are flashing red. U.S. corn exports to China fell 29% year over year in 2025, with empty corn elevators at Mississippi River ports standing as monuments to America's fading agricultural dominance. China has already finalized a 3-year corn import deal with Brazil, covering up to 9 million tons annually. The playbook is becoming clear. First soybeans, then corn, then wheat. A systematic rerouting of global food trade away from American producers. The timeline is accelerating. China's April 2025 soybean cancellations followed March's tariff escalation by mere weeks. What seemed unthinkable a month ago is now economic reality. Even more unsettling is how accurately this crisis was predicted. Atlantic Council analysts warned back in 2016 that China will weaponize soybean imports. Few listened. China has masterfully exploited non-tariff barriers like phytosanitary concerns to sidestep WTO scrutiny, creating a template that could be applied to virtually any commodity. The European Union and South Korea are reportedly considering symbolic soybean purchases to curry favor with the US, a clear sign of global realignment around US-China tensions. But the most chilling question remains unanswered. If soybeans were just phase 1, what is phase 2? Financial markets? Technology supply chains? The US dollar itself? What if tomorrow it's not just soybeans, but the US dollar that China cancels?